BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back. Let's get stuck in as Bitcoin's having a bit of a pullback at the moment. Rejection on the daily 10 exponential. So we closed down there yesterday, opened up there this morning and carried on down today. So there's a couple of things I wanted to show you. Obviously we've got a temporary support down here based on candle bodies and a little bit of a wickage. So we're talking 60,200, this kind of area. That's a temporary area. So if we bounce from there, it's pretty bullish because it means we don't make a new low. We've got the Bollinger Band itself, the bottom portion of the band down here just above 59,000. Obviously there's horizontal at 59,000, and then you've got E200 simple and exponential down here at 58,200. As far as momentum is concerned, you're definitely brewing some serious bullish divergence in the event that we do make a new candle body low below these bodies, so that would be bullish divergence. So there is a decent chance that the low will be formed between here and here. That is a golden cross retest if it were to hit it. Now, rather than trying to digest every last little piece of this chart, because it is what it is, it's back down below that 21 exponential moving average on the weekly, which again is not where you want to be closing. Look, it's only Wednesday. You know, we can see all kinds of stuff take place throughout the week. But at the moment, we are below there, and we don't want to be below there. We want to be above there. And again, based on the 4-hourly, there's nothing on this 4-hourly that's suggesting anything amazing. We've got not horizontal, we've got a diagonal trend line of support if you were to measure these candle bodies, and we're sort of respecting that to an extent. No pump signal, no short signal. It's just a trend. And at the moment, it is still higher highs, higher lows on this 4-hourly. So we'll have to wait and see. What I was going to show you is this. So if we have a look at the gold chart, so we're always trying to find correlations and symmetry across markets, and to me it looks like the symmetry for peaks have been pretty neat and tidy. This is not a carbon copy, you can't do a fractal, but what you can do is see the last highs of gold that was just marked off on the 20th of May. Prior to that there was, well, I suppose highs around April, but the 20th of May. And if you take a look at Bitcoin, we can also see that the correlation between the highs are around about these periods as well. So we've got June, you've got another one here, major one around here, around 20th of May, and obviously these highs prior to that. So there is some kind of correlation, and that doesn't surprise me, as they're both more or less classed as, well, I mean, they're effectively commodities, aren't they, really? Store of value, that is the narrative, I think, mostly that surrounds Bitcoin these days, and that is the gold narrative. I know you can make, computer components and nice pieces of jewellery with gold, but really, it's seen as a commodity and a store of value for the most part. And if we're going to view gold as maybe an indicator for Bitcoin, we're in this descending channel, which normally, you'd expect to break out from. Descending channels are bullish, ascending channels are bearish for the most part. And we're pushing the top of the range. So at the moment, we are at resistance on gold. We're at a major resistance. But if we were to take the channel away and just think about what it is that we're looking at here based on the moving averages, we're above all of moving averages and actually doing the opposite of Bitcoin, which is getting support on the 10 exponential. Bitcoin's got a resistance and getting rejected from there. So really, I think at this point, looking at gold might give us an idea as to which direction Bitcoin's going to pick, because the correlation is not perfect, but the peaks and maybe the lows will line up for something. And we've had loads of hidden bullish divergence on the way down, marking this particular low. That's been quite nice, and since then we've been moving up ever so slightly, but recognize the importance of being at this resistance. If this resistance breaks, then we go for a big breakout on gold, and we'll probably see gold trading at new all-time highs. Let's take it down a notch to a 4-hourly and see what that looks like. Overheated money flow index read, one drive of hidden bullish divergence, and pushing the 200 simple moving average. So it adds way more weight to the idea that this exact area, 2,340, is a big deal. And if you were to break out from there, it would be a really serious breakout of a channel of moving averages, change of behavior on the short-term timeframes and the higher-term timeframes. What else should we have to think about? Being the weekly, perhaps, maybe resetting on the money flow index, coming down to 42. We are above all moving averages as well, getting support on the 10 exponential. So It's an interesting setup, really, because I would be looking at this, despite being at resistance, I would be looking at this as more likely to break than to break down. I think gold has got a better chance of breaking out now than coming back down to the bottom of the range and then trying again later on in the next couple of months. However, both completely, decent prospects for gold, but when at resistance, expect rejection. When at support, expect support. But because we're above all moving averages and this consolidation has been relatively tame, and the last peak more or less marks the same time frame that Bitcoin did its last major peaks, or one of the last major peaks, I think eyes on gold might be the better way to view this, really. And if gold breaks out from there, goes to new all-time highs, or at least the prospect of going up to new all-time highs, I think the chances of this area down here being the low is more realistic than us breaking down. We can obviously break down, everybody knows that, but I think the prospect of us breaking down below the 200 simple and exponential on the daily are less than for us getting support on there. And recognize what this is. A golden cross is usually an opportunity to wait for a retest of it. Now, it's never neat and tidy, but we have had some symmetry. We had this one down here on the 200 simple, we had this one on the exponential, and we had obviously a bit of a problem down here with that ETF and the launch, and then we just went to the moon after that. So it's usually an opportunity if you ever come down to it. So we are coming down closer and closer to it. Whether we touch it or not is a different story. We don't have to touch it today. This could creep up. It's rising. The support is rising, so it makes it even more bullish prospect to expect a bounce from it. And again, at the moment it's around 58,500. Over the next week it's probably going to be higher towards 59, and then if we continue with meandering, hashing out this area, we'll be seeing it higher and higher and higher. So moving averages and price action due to meet once again at some point relatively soon, and that is going to be a major opportunity for taking a position, whether it's futures or whatever. And Bitcoin might be the indicator for the absolute low of the market. Most of the time it does do that sort of thing, not always, but most of the time it will do that. So I think we should really keep a close eye on this exact area, really. If we do lose this temporary pit stop of candle bodies around the 60,001 or 200. So there's nothing much more to say about it than that. It's just an observation, one that I think is worth thinking about seriously, based on its own chart and on the merits of gold. I think today is going to be an interesting day. It's certainly going to be a crucial week for Bitcoin, and when it picks a direction. At the moment it's sideways, and sideways is boring. Sideways basically is it's rubbish, isn't it, really? It's just so boring, so rubbish, so stale, so static. Just, there's nothing going on in a sideways market, so I find it difficult for me to try and engage with you guys about it, because I know as much as anyone does that a sideways market is the least profitable for the most part, because you basically have no choice but to either sit back and leave it alone, or put your faith into certain areas which have yielded some bounces. I've done a couple of futures trades which I wouldn't normally do over the last few days, and they've been okay. They've been all right, actually. But you have to nip them in the bud. You can't expect them to go, beyond the expectations of your original trade setup. So, it's just one of those boring sideways periods of the market. I still think, though, that dollar cost averaging on the way down is going to be the most appropriate way to deal with this period. As I've said since December, we should be consolidating, and now we are consolidating throughout the summer. And then when the summer is over, we all start moving back up again. So this, like I've been saying, I strongly believe that this is the last chance you'll have to buy altcoins at relative lows. But finding the exact lows is going to be difficult, which is why incremental buys on the way down is probably the most appropriate way to deal with it. Recognize this, the total 2 on the daily, not much different to Bitcoin, approaching a 200 exponential as we did over here. We had a decent bounce, probably coming down towards it again. Whether you get higher low is a different story, but still a decent setup. And then if that does fail, this whole area here is the accumulation zone. So we're sat in the middle of the accumulation zone, which again adds more weight to the reasons why you may not want to go all in on one particular area. There's no reason to go all in on one area. And just like the fractal of the previous bear and bull market shows, once this little area is finished with and the breakout takes place, whether it's this year or next year, the big move is yet to happen. So dollar cost averaging into what I think is an accumulation area is the right thing to do. That's my strategy. Yes, some trades here and there are perfectly fine, but overall the big money will be made later on when we finally break out and go to new all-time highs on the total 2, on Bitcoin, on Ethereum, and hopefully on the altcoins that you've harvested your kidneys for and put your house on the market for. So that is that. Nothing much more to say. Hopefully we will follow gold, and gold hopefully will break out from this descending channel and go to new all-time highs and carry Bitcoin with it, and then they can both basically say, this is the direction I've chosen until further notice. Let's enjoy it. Right, thanks for watching. If you want to join the Telegram, links in the description. Patreon, again, links in the description. Other than that, please like and subscribe, and have a nice day. Take it easy.